Guten Morgen. Good morning, everybody. You ready to go? No. All right, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's get the party started. Hey, another day to trade, huh? Good morning, everybody. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay. We're an ECN. One of the unique advantages that we offer currency traders is you can choose the type of account that you want. A variable spread, a fixed spread, and ECN. They're all similar, only different, depending on what you want, what you need. That's the cool. It's your way, a trader's way, with Trader Wayne. I know that's cute, right? So we do these strategy sessions every single day, 7:30 in the morning, Monday through Thursday, here at Forex.Today, and every Friday at FX Street, where I'm also Forex Speaker of the Year. I also won the Best Forex Educator Award from the China Forex Expo. Huh. No so bad, no so bad. Cool. So I'm very happy to be here, and I'm very proud to have earned your respect and loyalty. Thank you for being on my team. And why do we do these sessions? Because we want to make you successful. That's it. And if you're a successful Forex trader, making your own decisions, then you can grow your trading account, slowly increase your lot size, increase your trading volume. And as your prime broker, we're happy to do that. And we'll make a little bit of money, not too much. It'll be a fair and happy and profitable business relationship together. You pull the trigger, we execute your trades quickly, affordably. Yeah. Was that too much? That was a little too much, wasn't it? All right, good. So, holy smokes, did you see? Did you see what happened over the European session? Oh my God, the Asian session. Oh my God. Isn't that interesting? Oh, Safari, and that's so funny. Have you been looking for that? No, that's something that we need to do. There's a coding thing. Yes, sorry for making you search for your Google Webmaster Tools. So, Anthony says, hey, made money. Yeah. Yeah, very interesting stuff, right? Euro week, pig week. But how about that yen? Holy smokes. Wow, what an amazing day, huh? So, by the way, I posted this one on Forex.Today, and I'm starting to see that members of our community are starting to post their trading ideas. So here's the one I just posted of the charts that you saw now. Here's Kate's post. By the way, look, she writes an overview of every major currency every single day. I'd be shocked if you're not taking advantage of that. But like Pippin in USA. Here's Pippin in USA posting the, look at these beautiful charts, huh? And this was a trade idea to go long, and then on the break it failed, and Pippin in the USA got knocked out. Pretty nice. So I left a little comment. These are pretty charts. And of course, give it a like. I'll be the first one to give it a like. Thank you, dude. So cool. The community's growing. I love the participation. So anyways, I put this one on Forex.Today just now, and you can see that we're very close to the conservative weekly target. You can see the entries are pretty logical, stops pretty fair. Not the world's greatest trade, you know, but it's a trade. And then, but look where we started. We've talked all over and over and over again about these pivots, right? Is this a coincidence that it's a monthly central pivot point? What do you think? That's total coincidence? What's up, Michael? Mr. Sanders. Where you been, bro? Yeah, Adam says, yeah, Kuroda's got a headache. Yeah, you know, and Jordan too, doesn't he? What are they going to do? Holy smokes. The capital flows are huge. You can't see the video of Wednesday, June 8th. Wow. All right. Okay. So we'll see how these play out. But again, the real move here are on the yens. You know, a big mover obviously is going to be like Euro yen, right? So let's look at Euro yen. Actually, you know, thinking about it, no. I think we left. Didn't we end yesterday on Euro Swissy? Let's go there. Sorry. Yeah, but what? Yeah, PJ says there. You know, I can't do anything about that. I suppose if they keep monkeying around with it, I could change the music, right? But all right. So here's Euro Swissy. Remember our trade plan was short yesterday? So short, boom, back into our short zone, boom, and still holding down. Okay, isn't that interesting? And another one that could be, it used to be I used to trade it a lot more than I do now. This is pound Swissy. Oh, this is an old note. Pound Swissy, huh? What do you think the trend is here? Money simply moving from where to where? And don't say, let's be a little more, let's be human about it. What are the humans doing? Well, Fred, if your money was in a bank account in London, that doesn't sound risky to me. But they are moving it because of the increase of risk of what may happen to the pound, right? So they're moving their money to Swiss bank accounts, from London bank accounts to Zurich bank accounts, right? It's kind of interesting, isn't it? Now, what happens then to the value of the Swiss franc? It goes up. Now, who does Switzerland do most of its business with? What's the Swiss, trading partner? Euro. So this is a problem for Switzerland because it makes their currency strong, and their largest trading partner is the euro, and right now the euro is also at the same time losing value, isn't it? Relative to other currencies. You notice the Euro Swissy, even though it's down, it's not down a lot. What's going on there? Does anyone know who Jordan is? By the way, you can pick up Michael Jordan's house for 15 million. Less than that, actually. Yeah, Peter says S&B dude. Yeah, the head of the Swiss National Bank. And so is it possible that they're trying to buy euro as euro is falling? And that's why even though you see a move like this, the euro is nothing like this, right? Well, I suppose in this time frame it is, right? But nonetheless, this is money moving, and very often, maybe it's academic, but very often it's interesting to ask why. Why is it moving, right? Now, a trader with an outlook more than a few days, right? Which, because obviously now we're down to a week to this Brexit thing. But let's say we ignored fundamentals completely, because a lot of people do. They just don't understand them. They just don't get it, right? So they ignore it and they just trade, which is dangerous, because imagine if you were just trading pure technicals now, wouldn't you be preparing to maybe buy if this dropped down a little bit lower? I mean, it's a buy, isn't it? How'd you like to buy this and have the UK leave the euro next week? What do you think about fundamentals now? All right, so factored in? No. Well, maybe this is everybody getting out. Is everybody out already? I doubt that. There's always more, right? There's always more that can be done. But maybe that's why we're down here, right, Sally Pup? No. There's the Nuno Meister. So, well, see, Sally says, good place to take a shot. I very much dislike that language. That sounds like degenerate gambling. I don't even like the language. Tisk. But I'd rather you say, well, that's logical support, right? Divergence. Well, okay, look. So what does divergence tell you? Okay, and I'm not sure how you're measuring divergence here, but let's say it's there. Divergence would tell you that because we're in a support zone, and you see, so here's the support zone, and you see divergence, then what it means is that these bears are beginning to take profit. They're taking profit. Does it mean it's bullish? No, but it's still bearish, but there's less and less and less and less and less and less bears. Well, how could that be if the market is bearish, but there's less bears than there used to be? Well, they're taking profit, right? Nobody's buying, but there's a lot less people selling. And so you start to get these indicators moving up this way, even though price is still, heavily bearish. Okay? Right? Nuno says in a trend you can see divergence a lot. Well, that's going to be the profit taking and then the resumption. So that there's something more important than the divergence at first. But like you might see divergence here, but that's the retracement. Boom. Then you might see some divergence here, retracement, right? So if that's what you're spotting, maybe your divergence is a little too sensitive and you have to change your indicators. But the most important thing on here in a bearish move is that you're at support, okay? And then if you see divergence, that's confirmation that traders are in fact taking profit. And because it's at support versus other places, it's much more likely to, potentially reverse, at least at some moderate term, right? So since we're only at the middle of the month, if we reverse down here, so I'm obviously looking at the weekly monthly cluster here. So let's say we did come down, but this is the monthly support, and we came down to weekly S1, monthly support 1, so it can reverse here if it wants to. Because there's 2 more weeks in the month, there's a reasonable chance that we actually touch the monthly central again. All things being equal, which I never understood that, but also in normal market conditions. So Sally says, take a shot. Again, I wouldn't say that. That I don't like the language. Okay, so what I would say is because it's at support, okay, and you believe the pound is oversold, or the Swiss National Bank might actually intervene and weaken the Swiss franc, okay? They're probably going to buy a lot more euro than pound, but if Swissy weakens, then so be it. So another way of looking at it, Sally, is if you believe we're in a support area in which the market may reverse, in particular because bears are so oversold and starting to take profit, and then you witness a reversal pattern of some sort on some time frame, whatever tickles your fancy, do you take a shot? Well, you like the, probabilities. So you're like, all right, so if I'm long here and my stop's here, that's not going to kill me. Or stops here, whatever. Okay. Just make sure it's not degenerate gambling like, I bet you anything this is going to hold, and you buy it and just straight out. No, we're in the right place. Okay. We're in the weekly target, or sorry, monthly target. So again, this is the monthly target. That's the projected low for the month of June. Well, we're here. Great. Then we see a double bottom, which I would call this a double bottom, at the weekly support 1. It's not just any, that's weekly support. Sup. Okay, or, wow, okay. Okay, that is weekly support by definition. It is weekly support. Okay, great. So you're at weekly double bottom, which is the beginning of a pattern, at weekly support, at monthly support. So now the next thing is if you got above here, reset off the 200, came back down, got a roll reversal now, and buy off the M2, WM2, MM1 cluster, then yes, you would take a shot long like that. Because now you have the 1, 2, 3, 1, 2, 3 at support. Monthly and weekly support. Right? Yeah. But when you say take a shot, it's like, I bet you anything that's support. No, nope. Sorry, dude. Sorry, Sally. I don't gamble. Yeah, I used to go to Vegas all the time, but I never gambled because I was a speaker about foreign exchange. I'm like, I already have enough risk in my life. I already have enough excitement in my life. I'm not so bored that I need to sit down and throw money away on a game of chance. Like, how boring. Say, hey, well, why don't you mortgage your house? Put down $100,000 instead of $10. Oh, wait, that's what I do every day. I'm like, how much interest does the casino pay you? Well, I suppose you get comped, right? Gotta love the comps. Whoop, whoop. So let me show you something. I'm going to take a screenshot. Okay. I'm going to take a screenshot. So I use Snagit. Okay. And then Snagit opens this. Oh, wait, I'm drawing now. Okay, so there's my Snagit, right? So I'm going to save it as a JPEG. Come on, JPEG. All right, so there it is, 616, 216. Okay. So check this out. Let me show you how this works. So here we are, Forex.Today. Let me refresh just to make sure this isn't from like 5 days ago. All right, check this out. I can drag that image I just made on Snagit. Can you see it? Watch this. 3, 2, 1, and I'm going to let go. Boom! There's the image. So what is this? Great British Pound, Swissy, in monthly and weekly support. Okay? These categories will change in the near future, but I'm going to put it under Forex trading ideas, right? Observing profit taking on the currency pair. And then down here, you can, and this is, when you enter the caption, it's sort of the headline. So 1, 2, 3 pattern potentially forming. Okay. And then you can put in here your notes. So, I'll give myself a little more room, a little more space. Watching an area that seems to be a key level of support on multiple time frames. If divergence appears, then that could mean that bears are starting to take profit. If so, that could lead to an opportunity to go long when I see a reversal pattern in this support zone of monthly and weekly pivot points. Okay, save. It's going to upload that photo. Boom, it's on the website. And I shared that with you. Isn't that nice? So imagine now, as a community, we got our eyes on the prize on multiple currency pairs, on multiple time frames, using multiple strategies. both technical and fundamental, and we're sharing that data with each other, hopefully so that we could all either get better as currency traders, but maybe even on profit. It's so easy. Everybody wants to beat me, baby. Eric, well, what are my thoughts on algos? Yeah, why not? The only thing is an algo can't think. But if you want it to work for you, sure. But algos do all kinds of things, sure. But I have no problems. So like, I've met some algo traders, and this was even several years ago, but they were talking how, and some of them were high frequency traders too, which was interesting. But what they were doing is they had like a little server farm in their back office, and each one was running a different algo, and some worked very well at that moment, and some were horrible at that moment. And by looking at which algos performed best in that situation, they could say, oh, well, then we're in this type of market. Therefore, when I'm trading manually, I will execute that type of strategy until the algos stop working, and that will tell me the market's changed. And that's how they were using them, Eric. They were not actually placing the trades per se, but just imagine running 1,000 different simulators at the same time. You want to know which one, in real-time market data, which simulations are working. So just imagine 1,000 different demo accounts, each running different algos. Do you want to know which ones are performing well right now, and then what strategies are working, and then boom, start doing that. Make your decisions because of that. Okay. Oh, counter trend trading is working really well now. Boom, good, counter trend. Right, and then off you go. Okay. It's almost like data mining if you think of it that way, Greg. Greg says using it as a tool. It's almost like data mining, like you just like what strategy is working right now, and you're testing 1,000 different strategies, and then only using the one that works until it stops working, right? So just imagine having trend strategies, counter trend strategies, high volatility strategies, low volatility strategies, scalping, spot, swing, all that kind of stuff, and you're running them so that when one is easily outperforming the others, you could say, oh, well, we must be in a counter trend type market situation. And then boom, you just start using that for now. Okay. And another guy I talked to he just spent $8 million on his trading computer. All right, so there you go. So this is going to be an interesting area. So is anyone going to start participating in the community and sharing their thoughts? Just remember, when you post a trading idea, okay, and so let me just put a sample image. So you can do it by clicking. You don't have to drag and drop. The bulk of your thoughts and your notes and stuff should be associated with each thing. So most of your writing should go in here. And that's going to be associated with this image. So you might say, this could be your 4-hour chart, and these are your thoughts, your trade, what you see on your 4-hour. Then you can add another one. Okay, so let's say now you want to add an hourly chart. The same currency pair, but you've done the 4-hour, so now you want to do the 1-hour, let's say. And then, so you put 1-hour chart, and then talk about what you want to see here. Right? And then you want to do a 15-minute, so you add another screenshot of your 15-minute chart. Right? So let's do that one. Okay? And then that's your 15, and you write your notes. Therefore, I would blah, 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 blah. and you're hot to go, HOTTOGO. Also, if you click on advanced settings, if you want, you can tag it, which makes it easier for everyone to find, including Google. Yeah, all that kind of stuff. So that's how you do it. It's super easy. FX Diva says, Wayne, do you mostly focus on monthly, weekly charts for setups? You know, I don't look at monthly charts. And the reason for that is I don't believe they include the fundamentals, nor do they include the market sentiment that exists today. The technicals might be there, but that doesn't make them the same as they were, you know, 18 months ago, right? So, so I don't look at it that way. Weeklies, yes, and monthly pivots, yes, because they're support and resistance for today's market based on what happened last month. But what happened last year or the year before still might be a key support level because of a psych level or something. But again, because they're not including today's market conditions, then a lot of that information is irrelevant to me. A psych level is always going to be a psych level. I mean, that's just going to be that. You know, an all-time low and all-time high is always going to be important. But besides that, there's really very little in common between 18 months ago and today, except for that price. Doesn't make it the same. Okay? Mm-hmm. My pleasure. All right, so anyways, there's Swissy taking off. Looking around. CAD getting crushed again. So what do you think? Is this going to be a buying opportunity? I believe this was our target from, oh, I don't know, a long time ago anyways. Look at this now. We have a cluster of monthly, weekly, and moving average support. Okay. Now, because the top currently is monthly R1, isn't that neat? It's not weekly pivots that made the top. It's monthly pivots that made the top. Now we're down at the monthly central pivot. But the actual target here is 44.88. Somebody asked me about, how do you get the pivot points that write down the price for you? And I said, well, very often they write down the wrong price. So, here's a great example. It says monthly support. What is that? 171.1340. Well, obviously that's not correct. $171 for oil? Not correct. So 44.88 I can see over here, right? I don't know why it misprints. But based on this top currently, okay, the target bottom for oil in the month of June is 44.88. That's the range based on current market conditions. And this is interesting because it's, almost the middle, right? Do I ever use Fibonacci? We were neighbors when we were kids. Come on, Leo, let's go play soccer. No, I got to do my ratios again. You loser. Yeah, no, I love Leo, man. Eat a bone. Yeah, I'm that old, Greg. I'm that old. Yeah. Do you have you ever applied Fibonacci ratios to a guitar string? Oh, okay. That must just be me. Is that weird? Did that just get weird? I just got totally weird. Sorry about that. Yeah, cool. So this is an interesting place for oil, isn't it? 4-hour 200, monthly central, weekly reversal pivot. And some might even call that a roll reversal off of this kind of area, right? But I'm thinking 44, really 45, isn't it? 45 bucks. And that puts us down here, which I'm okay with. And if it goes lower than that, it probably just won't happen in June. And again, my assumption based on timing is based on the monthly R1 top. Okay? And so that tells me that we do this in June. Doesn't mean it's going to happen, but that's what the technicals tell me. Okay, remember our two buys on this, well, I guess three even, right? We had the double bottom, the retracement, the 1, 2, 3, okay? And then this was supposed to go up to 50-ish and then come down, right? I mean, I think I did 3 probably webinars just focused on that trade alone. And so I'm sorry, it went up to 52 and now it's coming down. But I don't think it should come down forever. But we'll see. Like Brexit could be really messy for global macro, and if that's going to slow the rest of the world down, like how is that going to help the UK economy? How is that going to help the European economy? Well, if they screw their economies up even more than they already have, then that's going to really hurt China and Japan and Korea. And if those countries aren't doing well, they're going to stop importing natural resources, which is going to hurt Australia, Brazil, and Canada. Okay? So it gets complicated, right? Is there not a seasonal factor to oil as well? Well, usually oil would be going up now, not down. Okay? Because I've told you guys before that I did research going back about 50 years, and the inventories on oil, so this is the amount of oil, let's say number of barrels, okay? The number of barrels of oil tend to go up, right, until you hit June 1st, right? So you hit June. And then from there, there's a drawdown. Okay, so when supply is increasing, what tends to happen to the price of oil? Down, okay? And then if it does peak June, in July, August, September, October, November, and December, we're drawing down the number of barrels available in supply, then what would you expect to happen to price? Okay, up. And then why do we draw down inventories? Okay, so you got your demand, and you have your supply. Okay. So June, July, and August, what do Americans do? the drive. And then October, November, December, the northeast of the United States in particular uses a lot of oil to heat their homes. So demand increases from June to December. So demand increases, right? So if this is price in dollars, okay, and this is inventories. So price, we'll just call it supply. In this case, the equilibrium point goes from here to here, okay? So price goes from P1, it's hard to draw, and then up here, P2, okay? So that shows an increase in price. Don't you guys miss economics? Okay. But what happens instead in the winter months? Well, let's say spring months. So let's say March, April, May, and June. What happens in those months? They build up supply in anticipation of the June, July, August driving season, right? So on and so forth. So they build up supplies. So the supply curve now moves to the right, which means an increase in supply, right? So we go from here to here, which means supply goes this way, which means, you know, let's say you went from 1 million barrels to 2 million, right? And no matter which demand curve you use, but it'd probably be this one, right? You'd notice that price actually went down to P3. And the equilibrium price is now lower than the old one, right? Okay. And of course, if supply and demand, you know, both increase at the same rate, then price doesn't change. You're still at P1 because, you know, this shifts this way and this shifts this way, and the new equilibrium point's going to be here, and it works out about the same. Whoop, whoop! Can I get a high five for the supply and demand curves? Woohoo! Yeah! Sounds like fun. Yeah, that's good stuff right there. Those were the days. So anyways, oil's still coming down, but could maybe be at short-term support. And look at this, guys. Blown through the monthly pivots. Okay? Not a shocker, though, because let me zoom out here. Not a lot happened the month before. So they tightened. Okay? So we'll see really what happens next month. Right? What's the trend? Right? You can see more of a trend there, but here it doesn't look like much at all, right? So, oh yeah, so anyways, I was thinking if Brexit, if they do exit, it's going to hurt the pound and the euro, and it's going to overvalue the Swiss franc. The Swiss franc is going to have to, you know, the SMB is going to have to intervene, and who knows what the ECB does and the Bank of England, and then, you know, then you got like, well, then Asia central banks are going to say, all right, nobody's in control of this mess, you know, so like China's going to need to react, Bank of Japan's going to react, Bank of Korea, because they were hoping at least the ECB or the Fed would do something. or maybe even the little tiny little Bank of England, right? But it could really mess things up. And then, of course, if that slows down even potential future demand for things like energy, then yes, oil can come down further, below 40s again, right? Very interesting stuff. Did you see that Nigeria changed their central banking policy yesterday? And they're going to do a managed float? Apparently, low oil prices and strong dollar makes it difficult for countries like Nigeria. BJ says, if euro and pound, if they don't exit, what's the response? Well, really, we don't know. But yeah, one may expect the pound to strengthen and the euro strengthen, right? Because it's good for euro. But also the money that went from, so that's why I showed that in the beginning, the money that moved from London to Zurich will probably go from Zurich to London. Diva, are you in Nigeria? But I'll tell you what, even in the United States of America, like bell peppers are like, they're like they're like $2 each. And if you want an organic tomato from a farmer's market, you better get ready to shell out $3 each. Right? Richest country in the world, and with no inflation, yet nobody can afford to buy anything. Oh, no, you're American. Yeah, bell pepper index. Over the weekend when I was supposed to not be working, I'm sitting on the beach. It's like 8 o'clock in the morning. My kids are already playing in the water. My wife comes down with a cup of coffee, and I'm just zoned out. I'm supposed to be watching the kids. I'm just zoned out. And she's like, "Oh, what? Were you sleeping, taking a nap?" I'm like, "No, I'm actually writing a book." And she's like, "What?" I'm like, "I got this idea. It's going to be called Ladybug Economics." And she's like, "Well, what do you mean?" I'm like, "Well, and I start talking about petri dishes and stuff, and she's like, "Oh my god." And I'm like mixing like 9 different sciences together and how to branch them together between finance and economics to create a unified theory. And like, oh my god, this is what I do at like 7:30 in the morning on the beach. So yeah, bell pepper index, yeah, especially if there's aphids on that bell pepper, the ladybugs are going to come in. New equilibrium price for bell peppers, yeah. Yeah, so Nigeria is an interesting situation. So if you look at the history of the world, when the United States was desperate for oil, when oil was 100 and something dollars a barrel, 140 and all that kind of stuff, we were just not getting enough oil because we had to compete with China, because suddenly China became an importer of oil instead of an exporter. So suddenly we're competing with China and India for oil from the Middle East, and we were just not getting enough from the Middle East. It was very problematic. So we had to find new supplies, right? Because we were not getting enough, but what if we had a situation where the Middle East used oil as a weapon again, or as a political tool? And now we're really doomed, right? So we had to find new supplies of oil. And we decided to go to West Africa, and in particular, to Nigeria. Not far from there is Angola. And the oil in Nigeria is very, very good oil. It's light, sweet crude. It's beautiful stuff. Easy to refine. Cheap and easy to refine, right? It's nice stuff. And, of course, the problem with Nigeria is it's in Africa. Nobody wants to go there, right? So the nice thing about the oil, because, let's say all the oil was in the interior of Nigeria, and you're like, oh man, that could be dangerous. We have to build all these, oil infrastructure, and, on the way you can get shot or blown up, or, all kinds of terrible, bad things can happen when you're surrounded by a population of Nigerians. Right, so from an American point of view, and I actually read this somewhere, the problem with Nigeria is Nigerians. I'm like, oh, that's very insensitive. But, it's real risk, and it is a rough and tumble places at times, right? So they're like, yeah, we like Nigeria for its oil, we just don't like the Nigerians, right? So the nice thing about Nigerian oil is it's offshore. You don't even have to go into Nigeria. You don't even have to see a Nigerian. You just pay them some money. Here's some money, and here's some free oil. Take some free oil. Keeps the population happy. To have some money, don't worry. You don't have to spend it on infrastructure or schools or education or hospitals or anything. Just buy some Ferraris in Beverly Hills and you'll be fine. Because that's how it works, right? Here you go, President of Angola. Let your son buy another house in Beverly Hills. True stories, by the way. So anyways, Nigerian oil is really good. And they're like, wow, we could just build these offshore rigs, and then the ships can come right in, fill up at the rig, and go. Like, the ship and the oil men never even have to see Nigeria. Oh, nice, right? So great. So you just pay some money to Nigerians. But now we have to protect this, right? So, because we're worried about the Chinese going in, right? So what does the United States do? They build a strategic command right there next to our oil. That's American oil, right? So you built this huge, just imagine aircraft carriers and submarines and all that kind of stuff. Like, you ain't touching our oil, China. This is ours. This is America's, right? Forget about Nigeria. It's American oil, right? So all that happened. And then, of course, the world changed. Entrepreneurialism kicked in, and we found a way to get oil where oil couldn't be get. We learned how to squeeze oil from a stone. Okay? And all of a sudden, like, we don't need Nigerian oil anymore. And that's that. And what happens to Nigeria? They potentially could have been filthy stinking rich, could have built roads and railroads and ports and schools and universities and hospitals and, so on and so forth. But of course they didn't. They could have been filthy stinking rich and spread the wealth across the people. But of course they didn't. So now oil prices are down and no one wants to buy their stupid oil anymore because we got our own. For all I know, they've probably pulled out all the aircraft carriers and all their submarines, but I don't know. So news came out, and we got it. Current account, nice. CPI 0.2, a little lower there. X, I don't have the core yet. Jobless claims 277, a little higher than expected. Don't have continuing yet. Philly Fed 4.7, way better than expected. Good job, Philly Fed. Current account balance is actually, I'll call it, it's about the same. Last month's deficit increased, increased, but to about what we got this month. But still, that's good. I think the bigger the deficit, the better when you're talking about America. Okay, here's core as expected. Headline a little less than expected. Initial jobless claims a little higher than expected, significantly higher than the four-week average. So, okay, not very good, not very bad. So isn't that interesting, guys? The history of oil and the politics of it is just very, very interesting. As you can tell, I latched onto it pretty hardcore. Okay, why? Okay, great. If you're rich, let's say you're rich, you like to spend money. But the people around you are also rich. So let's say you need a plumber, but the plumber is rich. So like, hey, I need you to build me a new bathroom. He's like, I'll need $1 million for that. What? So this is why a country typically has new population growth, either young people or immigrants that are not rich. Young people tend not to be rich. Immigrants tend not to be rich. So someone comes in and says, "Wow, gee, I'll build it for 10,000." You're like, "Really? You do that? You know how to do tiles and you know how to do plumbing and stuff?" "Oh yeah. I do that back in my motherland, right?" Like, all right, boom. So you're hired. Macroeconomics is very similar, where if you have money and it's valuable money, right? So now we're talking about purchasing power parity and all these different things. If you can buy goods and services that are equal or similar to what you can get here, but it's significantly cheaper somewhere else, then you're just going to buy that. Okay? So how about the Europeans? The euro went from, what was it, 140, and now we're at, 110. The opposite is true, isn't it? Are Europeans likely to fly to Disney World here in the United States? It's a lot more expensive than it used to be 10 years ago, right? Significantly more expensive, right? So they're like, "Well, I don't want to do that." But in reverse, do you remember when the English were flying to the United States just so they can buy iPhones and iPads? Remember that? They're like, "Everything's half price!" Right? The pound is at, like, what was it, 250? And they're like, "Yeah! Boom! We're in New York City! I love this country! It's great! I got an iPad, I got an iPod, I got some Levi's! Yeah!" Now they're like, "Oh my God, I can't afford to get on an airplane anymore," right? So that's what I'm saying. At that point, the English were importing so much that, even American goods, because they were cheap. So if now America is importing more than they're exporting, it means because we're filthy, stinking rich relative to everybody else, and we can buy products and services for other people that are willing to work for cheap. You see what I mean? Yeah. So that's why I'm like, yeah, let's have a deficit. Yeah, Andrew says, yeah, you fly to America, buy a suitcase, fill it up, right? But I remember when the United States hosted the World Cup, the Brazilians, I think, won. And when they flew home, they took 2 airplanes. Did you guys hear about this? The team took 2 airplanes home. One for the people and the luggage, and the second airplane for all the stuff they bought. Oh yeah, the second airplane lands, and they bought like refrigerators and like, oh my god. And of course, somehow there was a scandal because they were let in duty free and because they won the World Cup, and like, hey dude, you can't do that. Yeah, it was pretty funny. So anyways, look at this hardcore resistance. Very interesting stuff. Euro dollar at support and holding. You're probably watching that. Just kind of looking around to see anything of interest at the moment. There's a lot of things that have like 15-minute resistance, but we're a million miles away from resistance on the higher time frames because we've had such smaller pullbacks. So there's, it's just kind of an interesting thing. The U.S. dollar has been strong over the last few hours. Actually, 1, 2, 3, 4, all day, right? 8 hours. It reversed, I guess you would call that weekly M2. But really, I'm looking at the weekly pivots here, and they're not really that important on the Dixie. And I'm looking at monthly, and they're not really. So it's not playing off pivots. That's interesting, right? So Chinese currency, I'm kind of watching, not that interesting. Copper tanked. I think I told you maybe 2 days ago, we were approaching weekly R1. We hit weekly R1 on copper, and it dropped like a ton of bricks. Or how about a ton of copper ore? it went up, hit weekly resistance, and crashed. I wonder if copper traders use pivot points. Apparently they use weeklies. Okay, gold went up to weekly M4, which is the conservative target for the month. Stopped and reversed immediately, and is retesting now, getting ready to hit monthly M4. And if that holds again, that will create a double top on gold. So maybe we can take a look at gold. Gold. By the way, more and more Brexit polls. It's really sad, actually, that people might actually make decisions based on such things as these polls, because I doubt any of them have any proper statistical analysis and gathering and sample size. And it's just a really dumb way to make a decision for the entire global economy. But stupid is, stupid does, as they say in London, right? Oh, well, if the sun says leave, I guess I should leave too. I mean, oh my God, really? So anyways, this is what I want to point out. Now I got to change this to hourly to show you the double top I was talking about. Boom! That's what I'm talking about. Andrew says they do reflect current sentiment, though. You know what? Not necessarily, no. That is not necessarily true. The sample size isn't great enough, and probably the statistical analysis that they're doing is probably pretty simple. Okay? And this goes back to simple questions that I think Pascal was working on. Do this. Count the number of people that live in London. And I mean, go out and count each one by hand, Write it down on a piece of paper. Physically meet every person in London. The problem with that is they move around. And it's going to take you a while. And then you have to start saying, well, did I meet you earlier? Have we met before? Right? And it starts to become, even though it's pretty easy, like just calculate. Okay? It's not that easy. And so, you start to have to use mathematical tools to assume a lot. But if you don't have a large enough sample size, then that's not true either. And when statistical analysis, like a census, started to come together, do you guys know that when was the first census that the first real official census taken of the UK? Come on, Andrew, you have too much education. You should probably know this. What? Oh, right. Well, it had to do with the Norman conquest in 1066 at the Battle of Hastings. Oh, snap. Let's get into this. So now under the new ruler of the land, he needed to know, well, how much land is there? How many people are there? How many crops are there? The Doomsday Book! Yeah, there you go. See, I told you Andrew had too much education. Yeah, there you go. Doomsday Book. You got it. That was the first real sampling. Now, the Romans did it, but I'm not going to count that. because there was a 1,000-year gap. Right? I'll tell you the difference between the Romans 1,000 years earlier and the people in England in 1066. The English saw all these statues and stone ruins and stuff that were left over from 1,000 years ago. Well, think of it. What if there wasn't any writing, and the writing that there was about God and church and the Bible? That was the only written word for 1,000 years, right? So the English thought that those ruins and all these stone statues and stuff they found laying around their countryside were created by a race of giants. 3, 5, 4. You're like, oh my God, seriously? Yeah. So anyways, the Doomsday Book was really the first sampling. But, these things are very difficult. And later in life, you had questions like, how long did people live? Right? So what you do is you take everyone that was born, right? Let's do this sample size around 1,400. Okay, great. It's 1,400. You take up everyone that's born, and then you average out when they die. Okay, so that's the average age, right? Right? Well, of course not. So the math starts to get very interesting. What's the infant mortality rate of, what did I say, 1,400? Do you count them? And then, do you include years that there's war or famine? Right? All of a sudden you're like, dang, this is getting complicated. Yeah. So anyways, long story short, I think the polls are pretty much stupid. There's no way that it's proper statistics. And the fact that they could be politically or motivated or otherwise motivated, is just unbelievably high. So anyways, so here's a resistance zone for gold, and I think it might be interesting. Okay, next level up is way up here All right, so we're looking at the highest target it's supposed to go in June is 1343. Okay, and we're stuck at 1311. Notice how it's not 1300. That would be the psychological level. No. It's 1311, the monthly pivot. Now, it went a little higher, 1313, but someone else might have a different pivot. Okay, but notice it's clearly the pivot and not the psych level. The psych level didn't do anything. I find that just immensely fascinating. Does anybody else find that immensely fascinating? That we're topping out not at the psych level, but $11 above the psych level, right where we have a little line on our chart. And of course, that line on our chart was drawn, way back here. I think it's crazy cool. You know what I mean? I think it. So someone said, well, who cares about 1300? I'm all upset about 1313. Maybe it's 1313.13, right? But that's cool, man. Because they're not being psychological, are they? They're being intellectual. And that's an interesting distinction. And by the way, this is a much better poll than asking people, how much do you think gold should be worth? They're voting with their money. So anyways, interesting moves in gold. Yeah. Oh, oil's breaking through that pivot. Oh, wow. What is that? Oh, yeah, we're touching 47 on oil. Holy smokes. Goodbye, CAD. I'm going down in a burning ring of fire. I go down, 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 and the flames get higher. And it burns, burns, burns. That ring of fire. Yeah. A little more. Let's change the view here. And let's get this down to 5 minutes. Yeah, there we go. That's what I'm talking about. Wait, that hasn't caught up. I thought we were at 47.00. This is 47.51. I might have been caught up on a cash price versus a futures price. Okay, so no, all right. So yeah, it's interesting. So I'm looking at a cash price on one chart and a futures price on another. So 47.50 and 47.00. So there's a 50-cent spread between the futures and the cash, which usually is the case. So all right. So I thought we dropped 50 cents in the last 5 minutes. No, that's not true. Cool. It's got caught on the spread. Oh shoot! Look at the time. I didn't know it was so late. Hey, thank you for being on my team. Try out Forex.Today. Put some real analysis together. Because one of the things that'll happen, guys, is that let me bring up a page here. Let's do it this way. All right, so what'll happen when you make a post, so make a real trade plan here, guys. Make a real intelligent trade plan. What'll happen is you have your own blog, per se, where when you do that, your trade plans get put into a section of the website specifically for you, and you will be able to keep tabs on your trade plans. Okay, so when you click on your profile, all your trade plans that you upload are going to be here. Okay? And of course, if anyone gives you feedback, you're going to get likes and all that kind of stuff. But and maybe people will follow you and all that kind of stuff. But just even for your own, you should at least have one trade plan a day, right? Tony, I'll put it on the website. It'll be up in about an hour. So you can actually put together real trade plans. Let's say trade plans for the day, trade of the week, right? Right. So you could do TOTD and TOTW, trade of the day, trade of the week, and then just over time, just see how you do. And of course, you can get feedback, right, from your fellow traders, right? So yeah, go ahead and do that. Just make sure that it's not just all images. Make sure you write your thoughts down, because you know the chart is one thing, but make sure when you upload the chart in that little comment area under the image file, you write down your thoughts of what you want to do and why. Okay? And hopefully, as a community, we can share ideas, we can watch the market, we can collaborate, we can give each other feedback, and you know, with some participation and participation, you know, we can all do better together. So tomorrow is a Friday, I think, isn't it? Yeah. So I'll be over at FX Street for premium members tomorrow. So hopefully I see you over there. And if you're not a premium member of FX Street, then I will see you Monday morning here at Forex.Today. And thank you for being a client of TradersWay.com. We appreciate you, and we aim to make you happy. Take care.